So we're starting with you this evening, Andre, because the hot topic of the day in the business world is the BOJ finally lowering
Finally,
those
finally,
interest rates. Just a
right. So,
toops.
so, so
It's
the
a
the
start.
last, sorry,
I said just a toops, but it's a start.
just the tubes. Yeah. Well, the thing is, they at the last announcement in June, they sort of put the market on guard to say that they are about preparing themselves for it. They did say that they would be relaxing the liquidity conditions in the market, and they've started doing that. So it's not exactly a huge surprise to see the adjustment. I think some persons were hoping that, or would have been anticipating that they would have gone behind the Fed, because the Fed is actually expected to start cutting rates somewhere around September. They too have this similar set of inflation issues that we're facing. On the domestic side, and we have seen a few calls on the weekend for reduction from the central bank, because it really does set the tone for a bit of a ease on the especially the companies that have to be borrowing at these higher interest rates. So it is a sort of a relief. I don't expect though that they will be very aggressive going forward, because what it means is that if they cut too fast, and especially when you have the interest rate gap widening between us domestically and the international market, what's going to happen is that the smart money will actually convert to US dollars and actually invest there, because if rates are higher on that side, then that's where you'll find pressure too on the foreign exchange. And they did mention that in the last report. So they've actually been intervening in the market consistently. I think year to date, the BOJ intervention is roughly about 6.74, I believe, of total market volume. So it shows, I think that number two translates to 650 something million US dollars. So it shows that they are committed to ensuring that the landscape is one such that there is no fallout in the exchange rate, and while they actually start to cut interest rates. Now we've seen where inflation it starts to look positive. Again, there are still threats of shocks. Where protectionist stance externally might actually affect it, the political landscape, as well as the weather pattern too. We've seen a number of reports. We've been having a few earthquakes. Hopefully that doesn't materialize into anything that cause any major shocks. We did have effects from the Hurricane Beryl. Some persons are talking about that still, because you're paying a little bit higher in areas that you wouldn't have originally anticipated. But all in all, it's a welcomed feeling. I believe the market will start to breathe a certain sigh of relief, and it does set the tone too for the lower rates to start translating into lower cost of funding, and actually some of the financials of the market start looking a little bit better within the near to long term. I
What
don't believe,
reason?
just the final thing though, I don't believe that we're going to be going back to the 0.5% that we would have seen before, because when you have interest rates in those regions, what it means is that the market is, our central bankers are battling against some form of extraordinary circumstance, just like we would have seen with the pandemic. Recessionary environment too would have caused interest rates like those. So I believe that where we go from here with the BOJ will be largely dependent on what the external interest rates actually look like.
What reasons did the BOJ give for lowering the rates at this time?
So the main one that I saw was the inflation actually trending into the band. Remember, we were seeing interest rates inflation much higher than what they are now. So 5.1% is a fairly decent number. I think the target range is between 4 to 6%. We're not exactly at the 4%, but it is a move in the right direction. And we've seen internationally too, where there are adjustments from the larger economies. Europe has already moved. Canada actually moved twice already, and in line for a third one. Bank of England has already moved. So it is becoming almost the norm to see central banks start cut rates, and the main argument that will be supporting the moves is actually the inflation trending in the right direction.
And what does this mean for the business community now?
Well, so that's the thing, because a lot of companies who would have actually come to the market at any point before today.
Okay, Andre is frozen. All right, Andre is frozen, unfortunately. Hopefully we get him back. But in the meantime, I said David here commenting, David Gray commenting, a lot more countries have cut rates already. Motivation wants to know, will the interest rate to borrow loans from banks lower for someone taking a loan from the bank? Remember, the thing is, what we have seen in the past is that the banks take a little while to react. So because the BOJ cut rates today doesn't mean that the banks are going to cut rates tomorrow. It takes a few months before it passes on. And sometimes it takes multiple cuts by the central bank before the banks start responding. Because I remember when we were coming down the first time, when we ended all the way down at 0.5%, and every single policy decision, the BOJ was coming, it was another cut, it was another cut, it was another cut. And the banks did have a substantial lag, a few months behind the BOJ, but the BOJ is the one that sets the pace. They set the tone for what the commercial banks are later on expected to do. So let's bring in David Rose, because it seems like we lost our other guest. It seems like we lost Andre. So David, welcome back.
Hi, Kalila. Can you hear me?
Yes, I know you like to weigh in on all the topics. So before we get to
I'm supposed to be multifaceted, so
before we get to Panjam, what are your thoughts on the announcement today by the BOJ?
it's not a surprise, considering that, as they said in their release, although we should expect some little bit of short-term shock from Hurricane Beryl, they said within the next 2 years they expect inflation to remain in that 4 to 6% band. And also, they looked at other factors in the general market. And they've also highlighted that, as Andre had mentioned, they'd have stepped back, in a sense, in terms of their market activity. So the BOJ mentioned that they released about $20 billion in the most recent period back into the financial system. So what do I mean by that? So the BOJ has different facilities, the certificate deposits, other market operational tools. They will offer very good rates, right? And they will determine how much of liquidity, in a sense, they want to take from the system. So they might say, I want to issue a 9% certificate deposit, take up probably $50 billion worth of market liquidity. They basically pointed out that they've actually stepped back a little bit in taking liquidity out of the system, which in this case is an attempt to encourage more activity from the financial sector. And the June prelude kind of gave some context to it, because if you actually speak to businesses on the ground right now, it's very tough. So while the macroeconomic numbers look a little bit peachier, the truth of the matter is, on the ground for the microeconomic side, for businesses, it's very tough. So you're seeing, businesses report lower sales, lower profit. And remember, we decided to increase the minimum wage and security costs recently. And it's just kind of like double whammy in a sense. So not surprised. And 25 basis points is a small amount to start. The next BOJ meeting is end of September, before their subsequent meeting in November and for December. And the funny thing is, the BOJ has, been the leader ahead of the US Federal Reserve. So whereas we had to do interest rate adjustments earlier than the US Federal Reserve, we have to do our cuts earlier than the US Federal Reserve. And one thing for context is that Andre mentioned about the differential gap is what you've probably seen in the last couple of weeks is the FX rate is not 158.44 as of today. That's pretty scary for some people, because the banks are selling FX at 157, 158 when the dollar was at 155. So these current higher rates, pretty of concern. And that's why you're not going to probably see an aggressive cut in that same direction without, in this case, our multilateral partners being the USA having a similar adjustment in their monetary policy. And the thing is, this mid-September, I think it's September 12 to 15 around that period, that is going to be the last rate cut before the US general national election, or I should say presidential election. So this next rate announcement by the US Federal Reserve is going to be quite a thing to watch. Because remember, Trump versus Kamala Harris is going to be quite an entertaining show. But the comments earlier, somebody asked about the adjustments to interest rates at the bank. So if you have been following the central bank's governor, in this case, Richard Biles, he has been pointing that, while they would have been adjusting their policy rate from 0.5 to 7.00%, I'm not quite about a year or two, in a sense, the system itself from the banking sector or the financial sector took a lot longer to process, or in this case, see the transmission of those rate increases to the system, and those increases were not as pronounced in rates for both deposits and loans. And this was offset by the tone of the two largest banks being BNS and NCB. So
I remember that conversation well.
So I'm going to reference, the great Kirk Douglas working at Barita, who is a trained economist, who wrote a paper that kind of supports the same premise. When interest rates go up, the financial institutions like your banks and other financial players, they have to reprice their assets quickly to actually adjust for the faster repricing of their liabilities. So for example, let us say I, as a bank, go and seek funding, and I set that funding for 5 years, and that funding matured in 2022 at 5%. That funding has now had to be refinanced, for example, at 8, 9% for another 5 years. Now, but somebody might say, hey, since your basis point cut has occurred, is the bank going to cut the rates? No, because the bank has already locked in that 9% rate, in a sense, over the next 5 years, and they have to account for that interest expense when they're actually doing their planning on how they're going to adjust their rates. So if you probably see another 50, 75, probably up to a 200 basis point reduction from the current 7%, then you're probably going to see some better adjustments. But at the same time, even when adjustments do occur, they're going to be very gradual. Because I pointed out, those liabilities take time to actually smooth out over time. And in the same process, why would a financial institution rush to really quickly reduce their rates when at the same time they can benefit from the high interest rate environment that kind of a lagging period relative to their liabilities slowly coming down? So Kurt Lewis wrote a paper, you can ask him about it, post on Twitter, and this is supported by other research, economic research, that the BOJ's cut today might not really take effect until next year, September, and even then, the quantum of the cuts and other factors done by the central bank in terms of its monetary policy can have an influence on, those potential rate cuts. So if the BOJ was to also reduce the reserve rate in terms of how much capital or cash they have to keep at the central bank, that could also be a spur for, potentially banks adjusting their rates downwards. But it's not an automatic, hey, BOJ cut rates, boom, adjustment instantly. No.
Learn, grow, investors. Let's hope it's not painfully slow. I see Andre is back. Andre, what are your thoughts on the lag effect? Like, how soon might we expect to see commercial banks lowering their rates and reacting to the BOJ reduction?
It's going to take a little time. To be fair, 25 basis points isn't a lot to actually pass into the market. Again, it sets the tone for the market going forward, because what you'll find is that you buy ahead of the curve. So you find that some persons will be actually looking for longer dated assets at current yields, or probably, the market has been positioning for this for the better part of 2024. So it's not strange to see that, the conversation is actually materializing around the adjustments. So you find assets have been bought ahead on the financing side. Now I think that's where the question comes in. I believe that we will see the market asking to lower rates on the borrowing side faster, but it's going to take time for 25 basis points to filter into the market. I believe until we get to maybe about 100 basis points, 75 to 100 basis points, you'll start to see the adjustments there. But I just want to put one thing back in the conversation, that uh, we would have seen the BOJ CD, 30-day CDs, peaked at somewhere, I believe, 11.9% that was. And then gradually reduced down to the last one would have been 8.4%. So the market overall is understanding and appreciating lower rates, right? But again, it's going to take time for all of that to be passed on to customers and seeing lower rates translating to the balance sheets.
Awesome. Thank you so much, Andre.